Hi, today we're going to talk about how higher interest rates are going to affect your home loan. Now, if you already have a home loan and it's a fixed home loan, you don't have to be worried. Your whatever rate you have right now will stay at that. Now, if you have a variable rate or a HELOC, you have to check your paperwork that it probably will go up. This video is mainly for buyers out there that are planning to buy a home and that are scared because of the home prices and the interest rates may be going up, that they're talking about how the Fed is going to do that. Many buyers out there right now are saying, my God, if these interest rates go up a quarter point, a half point, I'm never going to be able to buy a home. I'm going to be bought out of the market. That's not true. The rates, if it goes up, will go up probably around $28 per payment. So it really isn't that crazy. On every quarter point on a $100,000 loan, I'm going to look at my notes right here, it only goes up around $14. So if you have a pen and a paper handy, write some of this information down. It'll make you feel more confident in your home buying process. Now, if you're buying a $200,000 home and the rate is $325,000, your price, not including taxes and insurance, this is just principal and interest, a $200,000 home will be $870 a month payment. Now, if it goes up a quarter point, okay, and it goes up to 3.5, your monthly payment will only be about $898 a month. That is an increase of $28. So only a $28 difference if it goes up a 0.25% on a $200,000 home. Now, on a $500,000 home, your interest rate would be $2,176 a month. Now, if your rate went up to 3.5%, your rate would go up to $2,244 a month. And that is a difference of $69 a month. On a $1 million home, if your rate was 3.25%, your principal and interest would be $4,352, and at 3.5 interest points, it would go up to $4,490, which is about a $130 difference. If that difference doesn't work for you, it means you're probably at a max qualified loan, and which I always suggest to people, do not be max qualified. When working with your mortgage officer, you want to try to stay under your max qualified limit. There's a delicate balance between the home you want to buy and your debt to income ratio. If the difference between $28 or $200 keeps you from buying that home, it means you're way max qualified. I always suggest to my customers, it's better to be a little safer. You don't want to be cash poor in the house and having to pay a higher payment that you can't afford. Don't get dismayed about the rates going up. This couldn't have lasted forever. And, we were lucky as it lasted this long. Remember, rates going up means the economy is improving, which is a good thing. And if rates stay down and the interest rates stay down, we have many senior citizens out there that are living off the interest rates and money they have in the bank. They're barely scraping by. So if the rates are going up, they'll make more money. And then in the long run, the home prices will do better and you'll make more money on your home when you resell it. Most people on a loan, on a 30-year fixed loan, don't own it for 30 years. They sell it between 5 and 7 years. In the grand scheme of things, 3.25% interest rate or 3.5% interest rate seems really high and scary, but it really isn't. For so many years, we've had higher interest rates at 8, 9, 12, 15% interest. So these 3.25, 3.5 interest in the future relatively are still great interest rates to have, and they shouldn't discourage you from buying your next home or your first home at all. Things could still change. Interest rates could go down. We never know, with this craziness going on. But they could go up a little also. And people are wondering, are home prices going to go down dramatically? My opinion, talking to many people and many people in the know, they feel like home prices may go down a little bit once we reach that 5 or 6% interest rate plus. Until then, we still have very low inventory, very high demand. And in that equation, when you have high demand with low inventory, the prices will remain stable and keep going higher. Plus, rent prices are going up every day. So there's still great demand for homes, which prices will stay at a good price, I believe. Remember, every 100,000, a 1/4% going up in the rate is around $14. It's like a large Starbucks drink and a croissant, which is around $13, $14, or whatever you purchase. And that's, again, $100,000 in a 1/4% rate increase would be around $14 a month extra on your home payment. Any area United States, if you're looking for a great mortgage person, or here in Las Vegas or Henderson, I can help you find that person. And also, I'll help you find that next house or your first house. Leave a comment below. Leave me any question below. Call me or text me anytime, day or night. I'm here to help you. I hope this was informative.